Can you hear me, Owen?
Yeah. Oh, hello. Hi. Hi. Hello. Can you hear me?
Yeah, I wasn't too sure if it was working.
No worries. It's good. Good. Hello. I think we can all hear each other. Hello. Hi, Graham. Hi, Hannah.
Good morning.
Good morning. Good morning. Hello, Hannah. How are you?
Hello. I'm good, thank you.
Awesome.
I have a doctor's appointment
Okay.
this morning, so I might have to leave a bit early. Is that okay?
That's fine. That's okay. The classes are recorded, so we're on you can just go back and you can, of course, you can catch up on YouTube. So
that's great. Thank you so much.
No problem. I'm glad doctors are seeing people again.
I
know. I'm glad doctors are seeing people again. So yeah.
I think everything's opening next week, I hear.
I think so. Everything, yeah. It's all. Hi, Dudley. How are you?
Morning, Owen. Not too bad. Thank you, yourself.
I'm well, thank you. I'm well. Yeah, everything opens next week. It's the one thing I just don't know. It'll be interesting. It's the swimming pools because it'd be interesting to see how they do that. I mean, with the ones you go into a restaurant, they can clean down, and this, I can see how you can do the sanitization with that. But my daughters tell me without even saying it or thinking it. I think they put a color in the pool now to know if people. I always teased my little one said to me the other day that she peed in the pool, and I was like, you don't do that. You don't pee in the pool. It's a pool. People, it's the pool. Don't pee in the pool, because I think the watercolor changes when you pee in the pool. I think for the children's pool to discourage the children from peeing in the pool. So it changes color. It's changed color. You peed. So in terms of sanitation, I don't know how the pools are going to work, but I think everything else, gyms, I can see sort of how they could work, because you can get the sort of the separate guards out. So that could. But yeah, it's good. It's good that we're trying to get back. I'll let you know. Chichester's just going through its own process of sorting out safety for September. We're putting in some. I've asked Hillary. Just to kind of get a balance. I don't know. Just to see what students are, but it's always important to hear what your views are, based on how we've done over the summer. And I'm hoping that. I mean, things will improve. When I say improve, even now that we know that we're teaching online, we have other resources, and you can it doesn't have to be just this sort of view. You can have boards, and we can have different things. So to see whether or not the possibility of teaching some of our courses online. I mean, I think there's a place we could teach this course online and maybe turn up into the college. Hi, James, welcome. Hello. How are you? And turn up into the college maybe for one or two revision classes. It does even alter the costs as well, because it's not as costly if we because I'm sure you know already. I don't think it'll be anything new for you. All the providers. Kaplan, BPP have always done online / in class, and a mixture of the two. So we're going to see, then get your views based on how you think this has gone from an online point of view, whether or not you've concentrated or you've been watching TV at the same time and you prefer to be in class, that sort of thing. We can sort of discuss that later. Anyway,
with the size of our class, is it not a case of that we sit like 2 lessons apart, especially if we've only got 5 of us. Because for me, I know it sounds silly, but I really want to go back to college.
Yeah, you like that? Yes. That's the thing, So it's an interesting one. It's always going to be. I mean, the thing is, we didn't have a choice when we're just in college. Now that we've been away, you have people sort of saying, "Oh, it's worked so well," and blah blah blah. Maybe we could continue. But yeah, so which is why, again, like you say, because we're just putting that out more for the professional courses. to go out there and see, even if we do some online and some in class, just to not to have it either or. Because as you are professionals, I think that's the balance. The question is, as professionals, in terms of coming in every day, it might be better actually, but we'll let you guys, it's very much seeing what students are saying to take that into consideration. But I would like to get back into class as well. I think it'll be good to see people. 6 months you haven't seen anyone. It's like just the four walls. I mean, that's not entirely true, but it's been long. Cool, great stuff. So again, like I said, I think where we are now, I think we're in a good place in terms of our material. So what we just really need to do is to just steadily kind of work on our material and do kind of cut out some time to keep doing exercises. The three papers that I've marked, all very strong passes. In your sort of 60s and 70s sort of place. And you probably did this, I imagine, without a lot of revision. So imagine if you had spent some time in addition to what you're doing. So what we're going to do first, yes, is go through that consolidation paper, and then and then we'll carry on with the other questions that I had given you. But don't feel, please, think of it like what I would do normally. That's what any tutor would do. Kind of say, do them. Just kind of work and see what you can do. Do a bit, see what you can do. But I guess it's my job to sort of just get you to try and do all of it, but see what you can do. And the more of it you do, then the better. And then you can kind of be doing it on demand and doing it in bits as we're going along. Right. Where was I? Yes. So let's begin. So let's go to the consolidation. If you let's go. So don't worry if you haven't. I won't call any. I won't call any names. Yet. Next week I might start calling names. I'm joking. I'm not calling names. So let's see. Let me share my screen. Here we are. So what I'm going to do is, again, because I think we're on the good side of time, I'm going to go through each and just talk through, when I say talk through, and then tell you the answer, and then we can discuss what are, some of them are a bit cheeky, the questions, so you can start to see what audit questions start to look like in terms of, it's just something, I think that sometimes they ask you for two answers, so you might actually get one and not get one. So I wouldn't despair. I think you're on it. I think you guys are quite good. I'm happy. And I think I might have mentioned in someone's feedback that the trickier ones are the objectives. With the written ones, with the written section, that's where you can get quite a bit of marks. So you should be, you were doing well anyway. Cool, great stuff. So question one was asking, you've done, I mean, yeah, for those who haven't done it, you can quickly probably read through very quickly, but I'm not going to spend a lot of time. It just says very quickly that you have this firm. You all got this, all of the ones I've marked, prospective, and I'm sure if those who haven't done it would have gotten it. Prospective client button, they're looking to perform an examination of a forecast. So again, what I'm doing on this class is to kind of extract from you as well other areas, so you can and use it as a teaching tool in effect. So this question, of course, could come and form in a format. I mean, the only engagement that we can give reasonable assurance for, if you like, is an audit, as far as we are concerned, from as external auditors. That's it, really. Every other engagement, we would just have to give limited assurance. And you all got that. I don't think there was any question. And that's what this question really happens. It really talks about. There's some ethical issues. They would like some information about the service. This is the first time they require an assurance engagement, as they have been operating for 2 years and don't yet meet the size threshold for audit, which is likely to happen between 12 to 18 months. So that's a good idea to probably start putting those things in place. You can also have, again, you can have someone ask you, you can have you can have a review engagement where they ask you to just review their financial accounts and to kind of review their performance, if you like. So they don't require an audit, but they want to review. if you like, and really a review of their controls, because obviously these things help the growth of their business anyway. So hopefully as you start getting that head on, you start realizing that you can turn this subject, I guess I would say that, into a bit of a novel type subject where you're doing bits and reading on it and just getting into the process of the thinking of how the auditors are thinking, and you just tend to write naturally about it. So here they ask us, the first question here is asking you, you might remember my picture of three witches when we first started talking. There will always be three parties, if you like, when it comes to to who's demanding the material. So who is using the material, if you like, who is it, who is it intended for? Who is it? So the audit, of course, is intended for the shareholders. But here we have a particular report. It tells us clearly it's been demanded by the bank to support a loan application, so the intended user of this information. Like I said, I won't waste your time too much, but generally look for that type of relationship. Who wants to use the information, who's going to be carrying out the work, and if you like, who are the responsible parties for putting that information together. The directors of organizations are typically always going to be the responsible parties. So if you like, here you had here, if you like, you had your bank reporting accountant and your directors. Number two, again, this kind of highlighted this issue of the degree of assurance we can give. So we typically have three types: yes, limited, reasonable, and absolute. We cannot give absolute assurance, never. It's impossible because of the manner of our risk, because we take a risk-based approach to our audits. So really, an engagement requires to provide, if you like, an engagement is to examine a forecast. So this question is asking about a forecast. So definitely the best we can do is limited assurance. Just you can switch on your mics. You can help me here. This question could have switched. This question could have been turned around on its head. Does anyone remember the statement that we write when you give limited assurance? With reasonable assurance, we say that we have the accounts are true and fair, and there is no material misstatement, and have been prepared in accordance with the financial reporting standards. With limited assurance, whatever the limited assurance, just remember what the wording might sound like. It's been a while. Don't worry, you're going to end up revising anyway. Nothing has come to our attention. Nothing has come to our attention, if you like, and that's the wording that we see with limited assurance. Nothing has come to our attention that causes us to worry, but it's really this idea that nothing has come to our attention. So it's not about material misstatement. We cannot use that because there's no materiality here. There are no benchmarks. This is all unique and individual. So here we provide limited assurance, if you like, to express a negative conclusion. Now, negative, again, we did this a while back. Negative is not a bad thing. It's important to highlight that. It just means that we use the idea of a positive opinion. Here they use conclusion, but you could see opinion as well. Our textbooks say opinion, but the principle is the same, right? So positive opinions and positive conclusions are given with audits. Negative conclusion here, and here it says here limited assurance, if you like, or reasonable assurance cannot be provided for a forecast due to, if you like, the inherent uncertainty of a forecast. So we cannot know, no one can know really what will happen in the future. So you're really asking us to talk about the future, which is quite tricky. Yes, so please stop me, please, at any time if there's something, if you hadn't got it right or you wanted to just push something. So here this question was, which of the following is not a reason for the bank requiring an assurance report so it says not. So this is another thing we see in audit a lot. This business of not, look very carefully. So if you work through this, I guess it's almost like process of elimination, right? And I think I'm sure you all got this. I don't remember, but please stop me and ask me. But the problem, I'm sure you can see here, the fact here is that it is impossible to associate the adjective of accuracy to a forecast. We can only talk about reasonableness. In fact, you and I know, if you remember from performance management, there was a strong strong thing, the strong idea of sensitivity analysis, where we're saying, well, if that happened and if that happened, that would be the case. So it is. We cannot talk about accuracy with forecasts. Again, I come back to the fairness of audit. You could almost assess this without being an auditor and think, yeah, Wayne, it's not likely that forecasts can be entirely accurate, and still get your answer by eliminating. So the answer there is C. Yes, the answer there is C. Okay, great. Let's move very quickly. Which two of the following are statutory rights of auditors? I don't know. Of course, I don't remember the exact marks that you all did, but you may. But let's just walk through them. So this question of statutory rights, I think in a way it's almost a question of what are your legal rights when it comes to carrying out the audit, if you like. And again, by process of elimination, you could sort of see that some of these things were almost negated themselves to a certain extent. You can see here, if I go by a process of elimination, let's just say you weren't even an auditor per se, you just think to speak at monthly board meetings, it would be odd for auditors to be turning up to, and board meetings are private, if you like, in internal management meetings between directors. So being invited to these board meetings, again, would be a bit, to receive information and explanation is necessary for the audit. Exactly. This is pretty much important. I'm just going to push you again. You can put your mics on. You will see this question again. This question here, to receive information and explanation necessary for the audit, under not engagements, under its chapter 4, just before you take on an audit, can you remember some of the things? Let me put it this way: what do you remember any of the preconditions for an audit? I think the question comes up again somewhere, but this is a bit of knowledge that I will drum it. I'm going to go to the chapter anyway today. There are 3 preconditions for an audit to take place. Any throw any at me if you. It doesn't matter even if you don't. I'm going to tell you anyway, but I'm just trying to jog your. The preconditions for an audit before you carry out the audit. Or 3 things, let me put it this way. The 3 things that the organization must be willing to do for you before you.
Financial reporting.
Yes, perfect. Yes. So yes, perfect. That's the first one. That's probably the most important one. You see, because we can't have an audit without benchmarks. So if an organization has not prepared its accounts with some financial reporting framework, we're just wasting our time. It's not even an audit. There's no point. This is a bit of knowledge they like testing regularly, because this is fundamental to what an audit is. So they must have prepared their financial reports. There must be a framework. What am I measuring inventory to? How do I know it's lower of cost than net realized? Adjusting events, valuation, and any others? Just any? You might. I'll tell you the other 2 if you don't.
Isn't it they're actually allowed access to the
perfect? Yeah.
Information.
Which comes back to this one, to receive information and explanation necessary for the audit. So they must have accepted, otherwise we're wasting our time again, because then it's just well, what are we doing here? Exactly. So, I mean, yes, I'm talking about it now again because it helps. You can get another little knowledge question. I mean, we're in exam mode now, although it's a bit early, but still. They ask questions like, what should be on the engagement letter? Nice knowledge question, maybe 4 marks, 3-4 marks on the engagement letter. Well, the fact that directors say that they're responsible and they're willing to give you all the information that you need, that they're very much in agreement with that. They're responsible for preparing the account and they will give you access to, and they have given you and will give you access to all the information that you need. Finally, the third one, which is critical again to the audit frame. So when I say to the work we do, by virtue of what we do, anything else? I mean, some people argue this against this one, but I don't know. It's a tricky one. A third one, I'll give you they must have. 1 second. I think let me give you a little. They must have maybe 2 words to a certain extent.
Oh, internal control.
Yes, they must have internal controls. Or let me put it like this. They must have systems. We saw a question last week, I think, we saw a question where, I don't know in what context, we saw a question where this auditor had gone in and they had no system for recording their cash or something like that. They just had no system. Imagine you just turn up to a place and someone just tells you, "Oh, here's all our money in the bank." It's okay. So how how did you record the money coming in? Oh, we didn't. It just came in. I'm sorry, I can't help you. Which is why I always say that people are usually wary. Auditors are wary of, well, you need to be of an audit threshold anyway. And restaurants typically, unless you're a really big restaurant chain, you know, otherwise people, you know, imagine the days, although you're all quite young. I don't know if you know, the days you'd go into restaurants and you paid with cash and you didn't use bank cards. In fact, they'd ask you cash or card and they'd say they prefer cash because of all the charges and things like that. So think about cash going through these restaurants. They could put in what they like. In fact, I've said many times, I think I might have given you stories of where you have, when I was training, where you had people just literally setting up laundrettes, literally money laundering, restaurants and property. So you just had this lovely chain, and then forgive me, their other market that no one knows about. So you just literally have all this money coming in and being literally washed and cleaned through the laundrettes and the restaurants, and then being channeled into property, which sort of made it all nice and neat. So so there you are. So an organization must have, if you like, information systems that can actually record. So use your own language. They can actually record the events that we see in the financial statements, because we take a risk-based approach, number one. Two, we must have a system to work with. Okay, great. And that kind of speaks for this one, to receive information. I need to move. I don't know. Sometimes I think I'm going to get through more, and I'm already here. I'm still here. Receive information and explanation necessary for the audit. And yes, you should, I think you might have all have got this, I suspect, receive notification of general meetings. You have the right to speak at these at general meetings, by the way. As you can imagine, I hope you didn't fall for this. This probably is where the giveaway is. Well, you should be able to contact customers, but not at any time. It's not really, and it's not a statutory right. It's not like a legal right. Access to their online banking facilities at any reasonable time is also not really a statutory right. If you need the information, you need to give them time and they can do it for you, but I wouldn't call it a statutory right. They almost have to write the questions to kind of just make up questions to appeal to getting a question bank together. Okay, great. So the answer there was B and C. Yes? Okay, great. Which two of the following are reasons? So which two of the following are reasons why auditors can never provide absolute assurance? Again, like I say, this is an interactive class. Hannah, your thoughts on this one? What would you say were reasons why we can never produce or provide absolute assurance?
I've put A and B.
Excellent. You're right. Excellent work. Excellent work. So perfect. This is good. So this means we can skip through them faster. And you're correct. We cannot test all transactions, and there are a lot of subjective estimates and judgmental matters. Please shout if there are anything, if you want to slow me down, if you think. Cool, great stuff. Then we had this next scenario. Sterling and Co. Had been appointed as auditors of Anfield. That would just seem very odd now if you're into the football. If you seems very anyway. Anfield Co. have asked if would assist with the preparation and represent them in a legal dispute with the tax authorities, and have offered them free tickets to a national football game. So it says here, in respect of the request to prepare, that which of the statements are correct. Natalie, what did you go with? Let's sort of.
I think I got this one wrong, Owen.
Yeah, I think you. Oh, you're not. I know what you did. I think you went with this one because you saw, well, a self-review. I think so. I might think you went. Yes. So, and that one was correct. A self-review threat could be created, of course, as the auditors would not want to admit errors, of course. But a self-review threat could be created as the auditors may not detect errors, if you like, in the financial statements they have prepared. I mean, that is just as, that's just as true. Because I guess the argument is, if you've done something, it's less likely that you will pick up the errors on it. You might, but it is less likely because you did it and you thought, as far as you're concerned, it was correct. And then there's the issue of not admitting. So I think both are self-review, threats. Yes, so number 7, Graham, I'm coming to you here. Well done on your work as well. So number 7, what are your thoughts? What did you go with here?
I put C.
That's correct. Both of them. Perfect. So unlikely to generate recurring. So this is good. And this way we'll get through it faster if all of you have done some answers. So great stuff. This is true. I mean, there's an issue here, of course. It is unlikely to generate. It's just a very objective. It is unlikely to generate fee and therefore would not be considered when assessing fee dependency. Yes, I mean, fee dependency is very much a regular occurrence. So it's a one-off. I'm not saying you should represent them, but we're just saying, if you like, to think about it. Representing the client would create an advocacy threat. You just should not. You should politely. There is no condition. It doesn't matter. I'm sure you know already, under any circumstance, to ever represent your client, if you like, in court. So that was there. Yes, and question 8. James, have you had a chance to play around with these questions? Or you can have a look at it now in your thoughts.
Yeah, I'm doing them as we go along.
That's fine. So that's okay. In your mind, okay. So what I'll do, yes. In your mind, James, which 2 of the following we can just walk through together? Which 2 of the following safeguards, if you're trying to make sure that you don't have self-review, right? So you're a big audit team or big accounting firm, you have auditors everywhere and accountants everywhere. What are the sorts of things that you think? Which 2 would you go for in trying to prevent people looking at each other's work? In other words, a self-review. Which 2 would you?
I thought E was right.
Okay, so you went for E. Okay, so this is more to do with the fact that you have you have the idea of, because a self-review threat is the idea that you're preparing the accounts and you're doing the audits.
Yeah.
So it's more the self-review threat, not the. In fact, let me come back to you, James. What threat is this here with the monitoring fee levels? It's a self-threat, but which self?
Self-interest?
Interest. It's okay. Self-interest threat. It's more the threat of self-interest, which is why you monitor fee levels, right? I'm just going to push you again, James. I know you can pass it on to anyone you like, James, if you don't know the answer. For listed firms, what is the percentage that you need to assess over 2 years that you need to really ask the question, this is taking up a certain percentage of our income for listed firms, if it's taking up a certain percentage?
Yeah, anyone else can have that one.
Like, I'm opening it up. Anyone else?
I'm having a guess. 15.
It is 15%. It is 15%. It is 15%. So the thing about audit, right, like I say, is that you could just write this and know it, but by writing these numbers, the examiner knows you actually picked up the book. Oh, yes, they picked up the book and they read it. So it's 15%. Okay, sorry, I'm deviating. So so unfortunately, not that one, James, because you're trying to watch out for to make sure that one team prepares the accounts and then the same people that prepare the accounts don't do the audit. Do you see where I'm going?
Okay, so I think A is correct.
A is correct. Very good. A is correct.
And D?
Excellent. Perfect. A and D. Good. So it's important to have some kind of quality control. So literally, this is another partner in the firm who will look at the work. This used to be called a cold review. I mean, you can write that there. They'll know that you're thinking about it. So that you would have, of course, the main engagement partner who will do a review of the work, if you like, and that's called a hot review. I don't know if these terms still feature in the book. We'll see it. So that's a hot review, the first partner. The second partner will do a cold review, looking through to make sure that, if you like, quality controls, ethical issues were looked at, the work has been done to the right amount, the right standards, that sort of thing. Okay, right. Dudley, we come to you. What were your thoughts? I don't remember what you picked up, what you wrote for these numbers, but I wouldn't disagree. I think I gave you. I don't know how harsh I was on your number 9. Did you get number 9 right? Did I give it to you?
I believe so. I think it was.
Okay.
true, false, false, true.
Perfect. That's correct. That's correct. Now, this was always, these are the times when, and I think most of you did write true, false, false, true. I don't know. I think maybe someone wrote, I don't know if any of you wrote, did any of you write false? I don't think so. But all of you might, let me put it this way. Did everybody write true for the first one? Probably. Yeah, that's good. Yeah. So as far as academics are concerned, definitely, if it's trivial, that's good. So that's the in practice. In practice, many organizations will have their own sort of internal rules on how to deal with gifts, if you like. And some organizations will just say point blank, don't accept anything, because it opens scope for any type of judgment. What is defined as trivial? What is defined as trivial? If you intern, or if you work at a big multinational, a big bank. I mean, some banks, when they do their Christmas parties, they send their people to some of the plushiest hotels in the country, and that might not be considered trivial by other people. So it's an interesting one. But for your right academic purposes, we will go with this idea of being trivial. So very good. Okay. Natalie, let's come to you here. Number 10, which of the two following threats can be created by the offer of free tickets? Again, to to a national football game.
I've got self-interest.
Okay, yes, I think you had A, yes, and
I might have got the other one wrong, actually.
Yes, so definitely there's a self-interest point there, because you're getting access to this sort of favor and to see games regularly. And what's the other?
But I think I got it wrong.
Yeah.
Not D, is it?
No, it wasn't. So advocacy was representing the client.
Yeah.
And it really was the risk of familiarity.
Mm-hmm.
And the problem with familiarity, I'm sure you've heard that phrase, familiarity breeds contempt. The idea is you guys get close, then suddenly you can't challenge anymore on issues, blah, 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 blah. So it's A and C. Yes, A and C. Cool. And right, great stuff. So please, I know James and Hannah, even when you, I'm sorry, I outed you now. James and Hannah, when you finish your work, you can just send it me anyway, so I can still mark it. It'd be good to just see how you're doing. Sorry, I didn't mean to do that. But we're all friends here. We're all friends, really.
Yeah, no, sorry, I have actually done it, Ian. I'm having trouble with the whole home situation. I don't have a printer or a scanner.
Oh, so you could do it.
So I'm having a bit of trouble with getting anything to anyone.
No problem. It's okay. I'm just.
I went to my mum's to get things printed off, but I haven't quite been back yet to get her to scan things.
It's okay. You could do it. All you can do is you can just write it on a Word. You can just write your answer in a Word document and just attach it as an email. It's okay.
Oh, okay. Yeah, of course. I didn't even think of that. I'm so sorry. That's so silly.
Okay.
I was just doing it by hand.
It's cool. It's all right. It's okay.
I didn't even think of that.
No worries. I'm sure James
I will send it over to you, though.
No problem. It's to be good so that we can keep records. It's good. It's good for your own CPD. It's in a way, it's good I have a record as well. Because I know you're not an apprentice, but I keep some records for the apprentices. I had one meeting yesterday. Oh yeah, James. I'm sorry. Dudley. No, Dudley, you're being good. There are a couple of apprentices that Debbie's trying to get in touch with. He's like, Ian, they don't reply. I said Dudley replies. I'm sure he's been in touch with you. I don't remember, but we'll talk about that later. Okay, great. So let's look at here again. So let's quickly. Oh, this is good. So because you've all done this, bang. He says you're performing the audit of Greenwich during your planning meeting. You are informed that he suspects a fraud is taking place in payroll as payroll costs are higher. You're also informed that Greenwich has improved profits during the year as a change to a cheaper alternative which supplies lower quality goods. No new products. So that's one. Another extra point, no new products have been introduced, although development has started on a new product, which is due to be launched in 12 months' time, with all costs being capitalized. So hopefully, this is what I'm saying with audit. I don't think you have to have done financial reporting to do this, because we see these same questions creeping up again and again and again. So this question of capitalization of development costs, we saw, if you've done the Darjeeling question, you will have seen another capitalization question of capitalizing these costs and some of the issues to do with it. Okay, great stuff. So let's come to Natalie. Your thoughts? Yes, on which two? What did you go with here, Natalie? With you, were you happy with this one?
I went for A and D.
Correct.
Yeah.
That's correct. Yes, I you know, if anyone has anything different, you can sort of shout or sort of suggest. Yes, exactly. So typically, once we hear fraud, we're talking professional skepticism, and you must make the rest of your audit team aware. All the rest, again, like I say, with good judgment, you can read them and think, you know, I wouldn't do that. You can't be detecting all fraud, you know, and you know, you don't assess whether it's material before you. Fraud is fraud. It's systematic, isn't it? It's systemic. Sorry, that's the word I was looking for. Systemic. It's systemic. There are this. I mean, some. Whew, the other one. I mean, I don't know if you saw on the news yesterday. I just didn't even. I thought it, but I didn't believe people would go that far. Some dude was convicted of furlough fraud of up to £500,000. I was thinking, that is amazing. I mean, like, people have just, it doesn't matter in however short the time is. I mean, for us, 3 times, it's able to get 500,000. I think it's just some really crazy minds out there. So it's more systemic. So just as soon as you suspect fraud, worry. And reporting to immediately is a bit extreme. So I'm sure you're all happy with there. Again, I keep highlighting, I think audit is probably one of the fairest ACCA subjects, but I would say that, I think, because you can almost kind of see where they're trying to go. Okay, great. Hannah, your thoughts. Number 12, where did you, in terms of this, again, just looking at it from an analytical point of view, we're trying to look for reasons where we would see explain an increase in payroll costs.
I've put does not.
Good. Oh, sorry. Start again. Sorry, Hannah. I think we lost you. You cut out there for a second. No, it's okay.
I put does not explain, and then I put it does explain.
Okay.
And then it does explain.
Excellent.
And then it does not.
Excellent. Brilliant. Yes. Don't worry. When you have to go, you have to go. I'll just keep talking to you until you have to leave us. But that's fine. So that's number 12. And that's correct. I think you all got that as well. And this is straight analysis by just looking at what you would expect that, right? I don't think there's anything special there. Now, I thought this was a good, because now we start to move into the world of audit. And I think you all still got this correct. Our job, without just going on for long, is to look at the financial statements and the disclosures. That's what we're auditing. We're not really looking at this business. We're not there to advise them as a business per se about how they can grow and things like that. No. That's not our business. We're independent. We're neat. Come in, pay us, we're out. So, so here, Graham, what were your thoughts? I'm sure I don't remember what you wrote here, but which of the following describes a valid audit risk?
Yeah, I got this one wrong. I think I put A. Why have I put A? It was early this morning.
Yes, it's good. I think these things can be done that early. Dudley, do you want to chip in? Dudley, what did you think here?
I got this one wrong as well. I think I went for D, but...
Oh yeah, it is B. B is correct.
No, I went for D.
Oh, you went for D. Cost may increase. Yes, you see, yeah, cost may increase in the long term. You see, this. So I want to sort of help you sort of see the difference between technically what is a business risk and what is an audit risk. These two are technically the two potential, if you like, audit risks potentially, because they are to do with the financial statements. You see where I'm going? These two are more business risks. Customer complaints may increase as a result of a reduction in quality. So yes, customer complaints may increase, but it doesn't, I mean, if it was about customer complaints leading to the need for provision, if they had mentioned the need for, I mean, ultimately this C is really B, because customer complaints will lead to the need for us to put in a warranty provision in the financial statements. costs may increase in the long term. Again, very much a business sort of risk, but it needs to come back to this. You can see the fancy words here, this issue of overstatement or if you like, understatement. So the thing here is that the reason why A fails, of course, is because what they've done, if you remember, was they went for a cheaper supplier. So the argument here is going for a cheaper supplier, you would have less of a purchase cost, if you like, in effect. You're going for a cheaper supplier, so purchases would be less. So it really isn't the case. I mean, that's your business. If you go along and you find, if you can find a supplier, I mean, if you find a supplier who's giving you something cheaper and you're still selling the product, that's great. No, that's not our problem. Our problem is to do with if there are returns as a result of this. Well, yes, you're recording sales, but we need to see the credits coming off, and we need to see some kind of warranty provision. Is a risk here because we know. So the answer here was B. Good. So this is probably one of the first questions to focus you on audit risks. Audit risks. Remember, again, in the long case questions, when you're writing, remember I talked about this a lot. When you write the audit risk, when you put your table together and you highlight the risk and the consequence, when you talk about the recommendation, it must be to do with the financial statements. It must be to do with financial statements, and the consequence must be to do, the consequence is that something is overstated. The consequence is that something in the financial statements are overstated or understated, if you like. Not forget the business risk. That's not what we're doing here. Really important to separate the two. Okay, great. So the answer there was B, because here the warranty provision, the fact that because as a result of you selling goods that are of poorer quality, is the chances that these bad goods would now result in goods being returned, and therefore we would need to increase, if you like, our the chances we're going to get some goods coming back. Okay, great stuff. I thought 14 was a little interesting. When it's not tricky but interesting. Natalie, what were your thoughts there? But just to carefully look at it, but it just cheeky but not difficult. What did you write here, Natalie?
I put maybe C on my answer, didn't I?
Yes, and you're right. And you're right. Again, like, because so let me try and kind of help you out here. I know I've said that we don't need, again, I'll talk about the theory again, but I've highlighted the factors here. If you're making a new product that has the potential to be sold, if you like, we have research and development costs. Until we come to the point where we're thinking, yes, this thing will definitely sell, we expense them as research costs, if you like. So development costs, if you like, are capitalized. We capitalize development costs. That's the point here. There are certain conditions for determining this point, and that one of those points is that, one, you will have the funds to finish, if you like. Two, it's technically feasible. People are saying that yes, this thing is ready. It can be sold. It's passed a test. Maybe it's got the right. It could be a drug, and we think it's kind of feasible that this drug can now work. You know, the scientists have put their tests together, and so that's the first one. Now, let's walk through this just to sort of see where they're going. So development costs are overstated. As such, costs must be expensed as incurred. No, that's not true, because you see, development costs themselves can be capitalized, right? It's really just testing the point, if you like, as to whether or not they can now. It's just testing that point with those costs. But as far as we know, this is actually a general statement. It's just saying development costs are overstated. As such, costs must be expensed. No. That's not true. We can actually capitalize them if this product if we can get to that point. It says that development costs, this was when I said cheeky, development costs will be overstated if Greenwich cannot guarantee that the product will be profitable. Well, actually, that's impossible. No one can guarantee that a product will be profitable. I mean, in fact, accounts run throughout the whole year in losses. They're still trading. That doesn't stop us from capitalizing the development costs. I don't know, maybe an economic shock has come along, you cannot control that. So I thought this was, I mean, when I say cheeky, it's a good point to throw you to think, oh yes, of course they must prove it's profitable. No, you can't do that. It says, you see, because they give you some other cannot guarantee. I mean, you cannot do that. Development costs will be overstated if they don't have the funds to complete the development. Yes, because having the funds, and as I say, as we do these, we'll see many examples, having the funds to complete a project is part of whether or not is the point where we can start capitalizing, if you like, those costs. So if you don't have the funds to complete the development, then we should recognize all those costs as research costs. And it says development costs will be overstated if Greenwich is not amortizing the development costs over the useful economic life. Yeah, I thought this was a bit of a red herring because, to be honest, we hadn't quite reached the point, if you like, here of development. That's the first thing. And it's not in all situations that we have to amortize what it is that we've made. It might be a brand, you know, so we cannot quite. But what we probably have to do is just look at it every single year and revalue. So really, the answer here was C. I think what we might do is we might look. We have time, so that's good. I might actually spend a little bit of time on this standard, but you'll see the questions are quite common to this area. Okay, great. Yes, this is a good one actually, because this allows us to, and I will take you to the but let me get your answers first. I think Natalie, Dudley, let me come to no, let's go to, it doesn't really matter, because I know Graham didn't get this one. You missed this one, Graham. Natalie, Natalie, what did you write? What was your answer, Natalie? I'll come to Dudley last because I can't remember what Dudley wrote for this one.
I think I got one wrong on this one. So I got true,
yeah,
false, but
yeah,
I think
that's right.
False.
Yes, this would be false. And Dudley, because this is exactly what Graham did as well. Dudley, what did you do?
True, false, true.
Yes. You did true. Yes. You did true. Yes. So that's the point. This is why I wanted to talk about this. Now they are being silly. I'm sorry, they're being silly because no one performs an interim audit after the year end. Sorry, not in a bad way. In fact, I'll take you to the textbook where they actually write it. I mean, I was disappointed because I gave you the mark, Dudley, I think, because and I'll take you to it. You can look at this. I mean, in practice, I mean, the whole definition of interim means that we come in to do some testing on controls and look at some of the non-current assets and things that, you know, before the year end. We'll probably be there halfway through the year. But look, it says here, just show you this point here, timing, completed part. But they're right. I mean, they're kind of right. I mean, yeah, but it's that asking that type of question will just cause trouble. So they won't do it. They won't make that sort of open. Look, it's completed partway through a client's accounting year. Really, why early enough not to interfere with year-end processes? Give us adequate time. And where are we? I saw something here. Yeah, I think the key point here is that the whole idea is to do this thing part way. Typically, you can see it says. I know it says for example, before the year end. I know they're saying it doesn't have to be, and I accept that. Actually, I will accept that. But they're just opening because I think this was I missed this. It said must be. It doesn't have to be. I accept that, but it is typically done before the year end. Now, this one here, the audit plan, which is important. We're talking about it now. Hannah, Hannah. What were your thoughts here? What did you write, Hannah? The audit plan will be used to create the audit strategy. True or false?
I wrote true.
Yes. And James?
I wrote true as well.
Yeah. So let me take you to the text and show you something that you need to see now. And this is something I would like you to, I mean, please. I mean, I will go through it again. It's just, there's very little time. Please read chapter 6 again. And this is important for audit. So look at this. There's this, here we're talking about planning. And the language is very unfair because in normal English, it's easy to see how the two can be mixed up. In audit, the big word, really, a word we'll come to when we come to your third year, is this big word of strategy, right? The strategy is the overall picture. The audit plan is the plan that the audit senior sort of takes away and decides the little bits. So the audit plan lives, and we're going to go through it in a second. The audit plan lives inside the overall audit strategy. I guess the question is, then what is the audit strategy? And what you want to almost have in your mind, because you can get this as a knowledge question as well. And it's not a bad question. The audit strategy, the risk strategy, think of it like the audit risk strategy is you're looking at the whole picture and you're thinking, right, we have 10 balances here. I have 2 weeks. Inventory is in Loch Ness, sorry, Lake District. Some is in London. Right. What is the industry? Do we need any experts to come in? How material, what are the interesting balances here? What are the risky balances after looking at last year's file? Typically, we've looked at inventory. It might be receivables. What problems did they have last year that we need to think about? Have there been any fraud issues? Anything new? Have they merged? Any consolidation? What's going on? So that overall picture, you can see here, audit strategy. You can see here we have this thing going on here, selection of the audit team, the budget. That's part of the strategy, but that bit here is based on to what extent, how difficult is this audit going to be? In terms of materiality, do they have internal controls? Any changes in the laws, changes in accounting standards? Do we need third parties? So looking, do we have enough knowledge for this? Do we need to bring in people? Do we need to outsource some of this? Do we need to bring in another firm? This is, of course, based on an understanding of the organization, so knowledge of the business. So there we are. So sometimes what you see is, I mean, I've been on a few, say, audit planning meetings where the team is there, but they'll call in some manager who worked in the industry or something and say, come along and sit in and tell us some of the, the pitfalls or some of the tax issues that we should be thinking about and little things like that. So they'll come in and sit in on the meeting and give their own. So that's all part of the audit strategy. That's audit strategy. Then out of that, you can see here, you see the audit strategy allows you to talk about what resources, amount, how it'll be supervised. Then you have the audit plan. And look at how detailed the audit plan is. Literally saying, okay, we have 2 weeks to do this. This is the actual audit itself. What audit procedures are going to be carried out? And so I've already highlighted, this in a way gives itself away. Typically, an audit file will tell you that would have a pro forma, you literally follow it. But the audit senior or the audit manager might want to amend that to do a few other tests. So literally, what audit procedures are we going to perform on receivables? What audit procedures are we going to perform at stock take? What audits to make sure we complete, for completeness, we cover everything we need to do? Who is going to do them? Sample sizes. When is the work going to be done? That's the plan. So the audit strategy is the big picture, and then you have the audit plan, which is why this question, like I say, was quite cheeky, but now you won't forget it again. You see, it says here, the audit plan will be used to create the audit strategy. It's the other way around. The audit strategy will be used to create the audit plan, which is why it was false. Right, good. So that's a good revision of chapter 6. Please read it again, just spend time. It's not, you can see here, audit strategy, increasing level of detail. It's not that crazy. It's not a bad chapter at all. Okay, great. That's 15. All right, let's go. Let's carry on. Yeah, then they gave you this long scenario. This guy has one sales. This company has one sales rep, visits the shops. Orders are recorded on this order form, which is referenced. First letter of the customer's name, right? Passes the completed form to the warehouse. It's dispatched by courier. Lots of little annoying things here. The other copy is sent to Mr. Jones, and each Friday he puts it in a sales day book, files it alphabetically. Dispatch notes are not retained because filing spaces are limited. He opens the post every day. He inputs, checks a bank daily, reviews the accounts receivables every month, and writes to those people within 90 days. So lots of issues here. And he doesn't use the facility. Okay, great. So let's look at the, of course, yes, good point. Good point. Let me go to here. And I think this is a good point. This is good because this is teaching. Sorry, let me just go here. Let me just pull off controls. This is really important to highlight again. I'm highlight this chapter here. It would be in systems and controls. So please, chapter 6, chapter 8, these are nice chapters to revise again, to really strengthen your knowledge area. Really will really strengthen your knowledge area. So the first thing I want to talk about very quickly is that we expect an organization to have an internal control system. Can anyone remember the acronym for the control system? The whole system.
Is that like a cover?
No, those are your procedures. This is that's fine. This is the controls, the system itself. We don't like it. It's not good for it's not good for society, this thing. 5-letter word. I could do charades, but I'm not very good. Crime. Yes, great. Dudley, well done. Breaking things up. Crime. So there we are. So crime. So that's the entire control system. So we expect an organization to have a control environment, and so this control environment is very much culture. Right. What's the culture within the environment, if you like? We talked about these, to have an information system. This is what I was saying earlier on, that we expect an information system really as part of the preconditions, if you like, an actual process of order, right all the way to bank, a way of recording this, if you like. And we have a system where you also have clear monitoring right throughout the organization. You have a way of assessing business risk. I talked about maybe risk registers or risk heat maps, if you like, health and safety throughout the organization. And then we have control activities. So what activities in particular are you carrying out, if you like, to ensure that things are going on within the organization? Now, within control activities, we had another acronym. Anyone? This is good because hopefully you remember. These are some of the control activities. So we want to see within the organization that we're authorizing, physical control, segregation of duties, SOAP maps or OAP spasm. So control, but this is again, like I say, because with audit we're talking so much, but it's good we come back to a time like this so we can look at things again. So control activities lives within crime, right? So let's go back here to the question, because I think that it did give a few of you because again, you haven't done this in a while. So yes, so you can see here, they kind of gave you this it's a knowledge question. So not difficult, it's just knowledge. You remember. Here you have control activity, which is C, but you have other components of internal control, and all the 5 components of internal control are crime, but you have components within control activity, which could be OAP, spasm, if you like. So if you remember, the control environment is very much a component, if you like, of internal controls. And the monitoring of controls, the M, so that was the M and that was the E. And those were components. Segregation of duties was a control activity, if you like, and if you like, the processing of information, was a control activity as well. So this was a purely knowledge question. So chapters like chapter 6, chapter 8, purely knowledge questions. I mean, I think overall probably take about 20% of the paper, 20-25. A lot of the paper is still very much about looking at audit risks and looking at control risks and looking at looking at reporting. So I think knowing this is good for you as well. It just means you just scale and get those extra marks. So please, we can always come back and look at chapter 8 again, but this is a good way to do it. Okay, great. I think you guys were quite good with this one, I think. Question 17. Let's get to question 20 and then we'll take a, let's see, maybe take a break. So I think I remember, yeah, let's see how you did here. Dudley, what were your thoughts on 17?
I put A and E, so
yes. So you, yes,
is correct, but
yeah,
A is not.
Yes, that's right. This wasn't A and E. And Natalie, where did you go with this one? Yes, Natalie, how did you answer this one? Oh, she might not be there.
Sorry, I had it off.
Okay. Sorry. Oh, yes.
I think I've got this one wrong because I went with B and C.
You went with B and C. Okay, right. So let's look at this carefully. Which two of the following? And I think this was a very cheeky question because maybe it's the way it's written. It says which two of the following do not. So 3 of them describe control objectives. I think that's the issue here. Which 2 of the following do not describe control objectives? And a control objective, really, in a way, is trying to prevent something, if you like. It's almost as though, what is the purpose of that? What is the purpose of that control? So because you make these recommendations, right? That, oh, you should do this, but the question is here is really asking, what is the purpose of that, if you like, of that control? So let's look at these. Let's look at the controls regarding sales. I mean, what are we hoping when we want to look at a sales system, if you like? We want to ensure. I mean, this is not the control yet. We're just looking at the objective because we can talk about the control in a second. So the control is what we're physically doing, what is being actively done. But what is the aim of this control? So all control objectives are always about to ensure. So I think, I think Dudley said he put E. I'll come back to the rest of you in a second. So to ensure that all orders, right? You want your system to record. You want all orders that come through to be recorded completely. I mean, that's kind of like, you're like, yeah, definitely. I want all of that. I want everything, all the orders that come through to be on the system for the period. Yes, that's, if you're thinking about it like that, to ensure that all orders are recorded accurately. You're thinking, yes, we don't want the orders to be recorded any incorrect kind of orders. I think it was the framing of the question that might have thrown you, Natalie. I suspect. I think if you see it and you're thinking, okay, it says to.
Sorry, I think I now think. Yeah.
Yes. It's the phrasing of the question. It's just a cheeky one. Now here's the thing. He says to ensure that goods are only purchased. Now this question was very clear. It talked about the sales system, not the purchasing system. So this is a purchase question. So if the question has said, which 2 of the following represent relevant Voyager Co. purchase systems? Well, yes, definitely. You would want to make sure. And how would I make sure that control? I would make sure that there was authorization, clear requisition of the goods first before we just buy them. Because, you don't want to be buying goods that you don't need and having them go. But this is entirely a completely different system. This is a purchase system. So that's not. So this is why C is not representative of the sales system. And to ensure that all goods dispatched are correctly invoiced. Well, yes. I mean, if you remember, goods being dispatched are very much part of the sales system. So yes, that was that. So to ensure that order forms are sequentially numbered. Yes, I mean this one. Yeah, I mean it's funny because I am a big fan of this word sequentially numbered. But I think what happened for me, to be honest, was when I did this, and this, these were very strong, clear objectives. I'll be honest with you, in my mind, I actually felt that you do want order forms to be sequentially numbered, but it wasn't strong enough compared to the other three. I actually think this is slightly unfair. So, but I mean, I knew it was weak, so I knew the answer in the end would be, if you like, C and E, because they don't really describe. But I can see how a student can think, well, Oyen, isn't it good? And everything, order form should be sequentially numbered, you see, because how do we trace, how do we note this question of completeness? So it's more the fact that this is like a bad way of writing this. So what we're trying to do is we want to ensure that all orders are completely recorded completely. So what do we do? So you see this thing here is actually the control. So what we then do is we ensure, or we make sure, that order forms are sequentially numbered. So what they did here was quite cheeky, because it is to do with the sales, but it's more an actual control as opposed to the objective. Hopefully that makes sense. Yes. So but good work. So the answers there are C and E. These are the naughty ones, because this is more a control, an actual control, as opposed to the objective. The reason why we sequentially number is to ensure that everything is recorded completely. Right, cool. Yes, I thought all of you got this right. Hannah, I know you're still with us. I know you haven't run off yet. What were your thoughts here? What did you go for here with 18?
I went for 1C,
Yes.
2B,
Yes.
and 3A.
Excellent work. Good stuff. Well done. Yeah, and that's the right answer. Yeah, I won't drag it, because you all seem to pick this up. You were all here, happy here with this one. 19, which of the following advantages will arise using? Yes, James, your thoughts. So basically, these people don't use the receivable ledger control account facility.
Yeah.
You know, so basically the control account, sales ledger control account, they're basically asking what do you think is an advantage of using it, which, if by you reading them, because I know you haven't had as much time.
I would have chosen either B or D.
Good point. Yes. 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 Yes, you're right. And the answer actually is B. You're right. Is the fact that you can identify and resolve errors. Yes, you're right. I think this is also, there's a truth here, isn't it? That sometimes you just wonder. It's almost like, because this is sort of the same thing as B, but isn't it, saying errors maybe identify, very similar in an annoying kind of way. But I sort of see where they're going here, but it's not helpful, less likely to occur. That's true, because we're able to carry out reconciliations to the sales ledger regularly. You know, we can identify them, we can resolve them, and it's a fuller answer B, and they only wanted one answer. So very good. 19 was B. And Dudley, where did you go with 20? Did you
My answer to 20 was D.
Very good, very good. Yes, Graham, what did you have for 20 as well?
No, I put B.
Yes, this is important. The reason why I think, and Natalie.
I put 20. Is it 20? Yeah.
Yes.
D.
Good.
D.
Good. Hannah.
I put D as well.
Yeah, D is like the fullest explanation here. Now, you see here, this is important again, because again, this is what pushes us over the line. For controls, for tests of controls, we must see you doing, as in we must see activity. We must see the client actively doing something. So look at every single one of them. It says, which of the following tests of control provide the most reliable evidence that Mr. Jones reviews and follows up? So we could ask him how often, if you like. You can see, so it just says we just ask him. Okay. We could discuss, because you see, it's about the control. It's about what controls are in place. It's not what substantive tests. Remember, there's tests of controls and the substantive tests. Substantive tests are us looking at the assertions. We're looking at controls. So test of controls. What controls does this man have in place to ensure that things are... So really, we could review ourselves. This is a substantive test, and discuss, okay, that's really the test of control you're applying here, if anyone's going for that. Contact a sample of customers. This is substantive, and ask if they have received a letter from Voyager. Yes, to a certain extent. But this probably was the strongest one, because you see here, the fact that he sent out letters is a control. So we're inspecting them, if you like. So hopefully this helps you when you're actually answering your questions as well, as in what controls would you recommend, if you like. So you would say, send out regularly a sample of letters to your customers, chase them up, if you like. And so those are the kind of controls you're expecting the client to actually have in place. Cool, great. So that was D. Yeah, so very little slight things. I think I can just about carry on. I might be lucky. You know what? Yes, I think we can go up to before we take a break. And that means we can come back and start another question, if that's okay with you. Right, so good. So here we have this new client. I don't know if, because I think during the week Natalie had asked me about a definition of audit risk. Was this what caused you to ask me this question, Natalie, or was it that is this completely totally different? Is this just?
I think it was something in the exam kit.
Right. Okay, that's fine. Because in this question, so basically you have this very quickly. It just says you're audit manager, Collins Cosmetics. You have a new audit client. Every time you see new, just panic. Just think, oh no, we don't like you. You're bringing all sorts of risks to us. Commence, there's you, senior, junior, engagement partner, family company, manufactures perfumes, you sell under their own brand name. Someone's been recently promoted from sales D to MD, and new sales D outside the company, increase the credit period 30 to 90 days to improve sales. Profit's been falling over the last 3 years. They wish to explain a listing on the StockX. Professional skepticism, all efforts have been made in revising the client. Bonus scheme, 5 manufacturing sites spread across the country. Each hold a material level of inventory, and a full year inventory performed at the site. And plant P&M has recently been upgraded. I think I'm going to go around again because I think we all got this right. This says, what is the correct definition of audit risk? Dudley, what did you write here?
So for me, it was a toss-up between A and C. I thought it was a bit difficult. Well, it was a difficult one because if you look at, I went with C, but when you look in the book,
yes, right,
it starts with the risk the auditor expressing an inappropriate opinion and the risk the auditor fails to detect material misstatement in the financial statement. So I was a bit.
Yes, you're correct.
You know, that was I don't know why they would include both of them.
That's right. Yes, and that's why I wanted to go through it just to kind of to kind of hit the nail on the head there. And Natalie, what did you go with, Natalie, in the end?
Yeah, I went with C, but I agree with Dudley.
Yeah.
Yes. I didn't know if they wanted 2 or but I went with C.
Yeah. Yes. And Graham, where did you go with this one?
Same, C, but
C.
it could have been either A or a C.
It could. Hannah, your thoughts?
Yeah, the same. I had C.
Yeah. And James?
Yeah, the same.
Yeah. So you're right. I think when I read this as well, I kind of thought, okay, I'm sure you all know I would still argue that when you're writing this in any exam, please include both. But in a kind of, if you like, the simplest definition of audit risk is the question of giving an inappropriate opinion. It really literally is just that. Now, it is, again, there is, of course, as part of the definition, again, which is why I say with these two, especially these answers where you have 2 answers that are very similar, fundamentally, it is, if you're listening to anyone talk about it openly, or if you're listening to the first sentence that comes out, is always this risk of giving the inappropriate, and it doesn't say the right or wrong, it just says inappropriate, if you like, opinion. The risk that the auditor fails to detect material misstatement, if you like, is a component of audit risk, which is made up, if you remember that you have audit risk is made up of inherent risk times control risk times detection risk. So so I think the detection here leans more, because it is part of audit risk, actually it is, but overall on its own, audit risk is very much expressing this inappropriate opinion. So I thought that was slightly unfair. It pushes you guys a little. So, but the answer is C. But if you're writing, write out the full thing, and you just get all the marks as well. I think someone, I don't know why I think it was Dudley, but I think you might have rushed this question, Dudley, or maybe it wasn't Dudley. But I know Natalie definitely wrote risk of overstatement in both, as did Graham, overstatement for both. But I think
both.
Yeah. Dudley, I think you rushed this.
Yeah, I think you're right.
I think you meant to write. Yeah, I think you meant to write overstatement. But again, and Hannah, what were your thoughts on 22?
Yeah, I put overstatement for both.
Excellent. Now you know what you see. So I think my concern now. I'm not worried. I wasn't worried, but I'm not worried now. My concern now is how do you guys maintain? I feel like I probably use it talking about time. I feel like you're athletes and you have to maintain your pace now, because I think you've got it. You understand what you're looking for when you're trying to do your audit work or write your audit questions. You know what consequences to write about straight away now. So it's just how do you keep in this yeah, I mean, exactly. People are always, and that's it. That's really because it makes your accounts look better. So, and of course, we know definitely that people are always trying to understate, if you like, their liabilities, so to speak, or their expenses. So good, perfect. Yes, good point here. I thought this was quite a tricky one, if you like, a tricky one, and I had to just carefully tease it out here. So it says, which two of the following are detection risks affecting the audit of? So remember that the audit risk is equal to the inherent risk times the control risk times the detection risk. So here, so I think what I want to do is that so first of all, I mean, the answers here, the detection risks here are A and E, but I think what I want to do is kind of try and take you through this slowly. Then I want to focus on B first and get your thoughts first. Let's go to B. Collins Cosmetics is a family company. When you look at these risks here, I want to say how I want to deal with it. Which of these risks would you argue was best linked to B? Let's go to James. Collins Cosmetics is a family company. Or let me put it like this. Remember here, this is here that we call this here the risk of material misstatement. This is where the risk of material misstatement lies, on inherent risk and control risk. And then there's detection risk. This is the risk based on you as the auditor. You might not remember, but I'm just bringing this back to your memory. You as the auditor. This is the work you do as the auditor. I'm just going to push you guys one more. Detection risk is made up of two risks. Any ideas? I'll give you 2 words.
Oh, sampling or something?
Exactly. Sampling and non-sampling risk. So sampling risk, you did your best. You actually did you did what you were supposed to do, but you just somehow picked the wrong sample and came out with the wrong opinion as a result, if you like. And non-sampling risk, you just didn't do a good job. You were just incompetent. You sent the wrong people there. So this is all you. This is all on you. All on you. This here has nothing to do with you. You know, it's just nothing to do with you. It's to do with the organization. Okay, so great stuff. So Collins, yes, so James, I was with you. Collins Cosmetics is a family company. Which of the risks naturally attaches itself to the idea of a family company? Just thinking about it. Don't think too hard about it. Just think, how would you what are the risks of family companies, or what's the problem with a family company, technically?
I'll just throw this over to someone else.
Pick someone. You have to pick someone.
Hannah.
Hannah. Wow, Hannah's your fall guy every time. You're like, Hannah, I know she's not going to get upset with me. Hannah. it's good we're talking about it. Don't worry, I'll tell you in a second. But the
I'm
thing
not sure. Maybe control risk was what
Yes,
came to my head straight
it
away.
is. That's exactly what the problem is. You see, don't think too hard about it. It's control. Family companies usually have dominant characters. Typically, there's the head of the family. He started this business. They're growing. All businesses, all companies that we see today, right, start off as little, right, companies that grow, and then list. So ultimately, control. So there's a control problem here that despite, when I say control problem, sorry, when I say control, I meant, you know, people who dominant characters. That's what I meant by control. And the risk here is that despite controls, they override these controls, or they think that they are the CEO, they're in charge, and it's their company, it's their business, so they can do what they like. So this is inherent to the nature of these organizations. It is, if you like, it's just the nature of these kind of family companies that you will. So we attach the idea of inherent risk. We say, oh, they're a family company, there's an inherent risk. We're going to have to do more work, or we're going to have to be very aware of that. That's that. Right. So again here, let's look at D. A production-related bonus scheme has recently been introduced. Yes. Dudley, your thoughts? What would this now kind of cause to a certain extent? What does this lead to? This type of thing potentially when you do a production-related bonus scheme.
Well, increase production and therefore increase inventory, maybe.
Yeah. No, but think from the point of view of the risks within the organization. What are we likely to see? Yes, you're right. You have an increase in inventory, but you're likely to see people trying to get a bonus, cutting corners. So the inherent risk, there's a risk whenever you have all these short-term gains within organizations, you're almost needing to be almost a professional skeptic, so to speak, because people are trying to, there's an inherent, just by nature of these events, there's a risk now where we now have an added risk of to a certain extent, for lack of a better word, fraud, because financial statements, if they're not true and fair, if you're sort of, if you like, exaggerating figures on the financial statements, well, to a certain extent, I mean, I think we saw a scenario here where people were extending days for 90 days for sales, or in order to get more people. So the problem we see here as well is we have, if you like, an inherent risk as well, because there's a desire to do well, and chances are there'll be a cutting of corners as well. And here as well, it says the company wishes to obtain a listing on the stock exchange. So there's a tendency for them to massage their figures, to want their statements to look good. So this is all inherent, if you like. This has nothing to do with our firm per se as an organization, nothing to do with us, if you like. But so this is all very much to do with the these are all inherent risks, if you like, these three. This one here, the fact that the client is a new audit client here, really means that we have to do our homework. Fundamentally, we need to understand so you can see this is the first time I say, if you like, we need to understand the client. If you like, inventory count, we need to go in and actually, if you like, observe the if you like, count, and we need to make sure that we can attend all 5 manufacturing sites. So will we be able to go there and do, so if we fail, if there are any problems due to E or A, those will be really due to us or our own abilities. I thought this was a tricky one, really needed to be thought out carefully. And I went through a process of elimination, to be fair. They're all very close. I don't think they're the best of questions, but A and E, if you like, are your kind of final answers. But hopefully using this now, when you see a question again like this, when you separate out remember the risk, there's risk of material misstatement. These risks lead to a risk of material misstatement, the inherent risk. So the nature of the business, cash businesses, restaurant businesses, dominant individuals, the desire to list on the stock exchange, bonuses, all drive irrational behavior, inherent risk. Then you have control risk, poor controls in place by the organization, lack of internal controls. And then you have what's happening with us. All of this adds together to make up the audit risk. Okay, great stuff. So 24. Natalie, we'll come to you here. 24. What did you go for? Which two? What two things in association with this stock exchange listing that they're very excited about? What two things? How should we respond as auditors?
I went with C and D.
Perfect. That was the answer. Definitely, we need to have a cold review. I guess that's the term there. Have a secondary reviewer look at it, and we should increase the level of professional skepticism. I thought this was fair. I mean, increase reliance on written representations? Absolutely not. Decrease the level of substantial? Absolutely not. Resign as auditors? I think that's a bit extreme. There's no need to go all the way there. So definitely C and D were the right answers. And I think you've all passed, even though I haven't marked James and Hannah's, but from your answers that you've been telling me so far, that's good. Yes, this is an interesting one. Again, this is about relevance, making sure you're looking at the right tests. Graham, what did you go here? Which of the following options correctly matches a valid audit? So they said, let me just take you to the point here. They said that they had upgraded. So they're telling you the plant and machinery in two of these sites has recently been upgraded. So this is actual. They're telling you, oh, we've upgraded. They're telling you, oh, we've upgraded our plant and machinery. So you're going in. PPE has been plant and machinery has been upgraded. So they're telling you, okay. So how would you? What is the audit risk, and what is your response regarding? What did you go with, Graham?
Went B.
B. Yes, Hannah. What were your thoughts?
I went for B as well.
Excellent. Dudley, I think so. I think you went for B here.
Yeah, I went for B as well.
Excellent. And Natalie, the same?
Yes, B or N.
Excellent. James?
A.
Perfect. So I won't stress it. I think you can see, and hopefully you can see here that doing this means that if you ever get a question ever that says to you, how would you carry out the audit for non-current assets? The first thing, before you analyze, I think you should obtain. If you like, this is a controls test review authorization. So we're looking at really substantive tests. Obtain a breakdown. Use that language, and you're there. If you like, and you're there. Okay, good. Yes. I think we'll finish because we just have this one left. Yes. So ACCA cover. Remember that. Yes, and I think this is important because I think maybe we had a few slip-ups here, but it's good that I talk about it now. Remember, I mentioned that if you think about these assertions, the directors are claiming or saying certain things about their assets or their income. Income is a flow. We're saying this revenue flowed into the organization. If you like, income, if you like, it's a flow. It occurs. It doesn't exist. We don't use the term existence for income because we existence, something to exist. We're looking at physical things, if you like, right? So that's kind of if you're trying to separate the two out there. Let's look at this. So Tiffy provides financial services to retail. They have 20 branches. They have a policy of revaluing these properties every 3 years. They have an external valuer. They have an internal audit department responsible for the testing of the effectiveness of this. Management has indicated they'd like the auditors to use their internal audit department so the fees can be reduced. And the audit firm has previously used CATS and intends to do that this year. Which of the following financial statements assertions relates to property, plant, and equipment? So let me just kind of go through it just from a teaching point of view again. So PPE, these are non-current assets. So looking at what we have here, I'll just walk through them. Existence. Well, yes, they exist. You go in there, we test for existence. That I can see it. It exists. I highlighted that occurrence is associated with, if you like, flows. So occurrence is associated with income and expenditure. So the assertion of occurrence is for our income statement, if you like, and we don't use exist for income statement sort of assertions. Even if you buy a new building, we don't say it occurred, we just say we look for its existence, if you like. So we have this way of classifying them. So that's what spoils this one, if you like. Yes, completeness. You want to also test for completeness, that all of them are there. Again, I think I highlighted that it is unlikely that people don't, we just test for it. It is unlikely that people don't add in all their assets. People overstate their assets. So we're actually looking for you adding too much. The other standard assertion that comes with the income statement, the two standard assertions that come with the income statement are always occurrence and cutoff, because it's a flow. You see, it's a flow. It's a flow. So that's kind of how you always want to see it. So here we have, yes, of course, we have rights and obligations, of course, because what we see with PPE is we have existence, we have completeness, we have rights and obligations, we have valuation, of course, with PPE. These are the assertions we see with this. Rights and obligations, classification. Yes, I would go with classification. Of course, classification for both sits in both houses of balance sheet and statement of and income statement. So classification, typically you want to make sure you're putting, if you remember, you want to make sure you're putting property with property, you're putting intangibles with intangibles, you're putting vehicles with vehicles, that sort of thing. You're not mixing up your assets. And cutoff, like I said, cutoff is not really a balance sheet thing, because we don't buy assets that regularly, if you like, right? Can you see where I'm going? You're not buying enough assets, if you like, to make sure that you want to make sure something is in the right period. No, it's more about flows that we assess cutoff for. So unfortunately, cutoff does not fit into a sort of asset sort of system. So again, therefore, taking off their cutoff kind of makes this not work, and occurrence. So these, in fact, D would be very much income statement type things, if we're talking about the income statement. So the answer here is C. So we have presentation, if you like, the way it's presented and disclosed. Existence, yes, and completeness. So the answer here was C. Quite a good one for practicing your assertions. Again, I'm sure we'll talk about timetables and making sure you're able to go through the book again. I think that's a good idea. Make your own notes, to score as high as as possible. Okay, great stuff. So let's go to yes. Let's see. Yes, Dudley, what were your thoughts here? It's interesting. I think I saw mixed answers as I was getting close to the end. Some of you just nailed absolutely everything. I think a couple were slightly. What did you think here?
Yeah, 26 to 30, I didn't do very well. The last batch.
Yeah, that's fine.
27, I got B.
Yes. So interesting here. Good point here. I suspected, because you see, the B is not. You see, so think of it like this. It's important to think of it like this. So we're turning up. They come in. The client will value their buildings. You can see here it tells us that the revaluations are performed by an external valuer. So I think the question was just slightly tripped you, because yes, we as auditors can bring in a third party if we need to, if we want to revalue something again, or if we ourselves are not sure of the client. But this is different. The client themselves have brought in, if you like, an external value. So I think it was just the way the question read that might have tripped you. So we don't bring in anything for the client. The client will do their own valuations themselves. We come in, and if we didn't, we may bring in someone else again, if you like, an expert, to look at it if we weren't convinced. So really, this was to do with they must agree the scope and objective of the work to be performed by say, expert or internal auditors, then this would have been right. But the auditor must consider whether the valuation performed, because the external valuer has done his job and gone, is based on reasonable assumptions. And so that was why this one was C. Yes. Hannah, what were your thoughts on that one? Were you happy with 27? Where did you go with that?
Yeah, I did go with C.
Good, good, good. James, I know you haven't had a lot of time to, but are you happy with?
Between C and D.
Right, the auditor must state. Yes, I think this one is slightly unfair on you guys. You see, it says the auditor must state within the audit report that reliance was placed on evidence obtained from a third party. The truth is, a lot of the evidence you're carrying out, sufficient and appropriate evidence, is based on the best evidence is based on external third parties. So that is almost a moot point. But if you did rely on the work of an expert, yes, then you should disclose. But I think the third party there is the slightly unfair. You can see they leave them almost open to trip you. They should really be putting expert for you to sort of, and you would disclose that. Definitely, you would say that you've done that. But because a lot of, I mean, you're constantly asking third parties for information all the time. In fact, the bank is a third party. We don't exactly disclose. It's just part of our work. Okay, great. 28 was an interesting one. And again, this is a good teaching tool for me to explain. Now, if you remember, when I talked about cats, and just explaining it now will nail it once and for all. Some of you, I think maybe some of you did get it, but let me just highlight the point here. We're now living in we are in an infotech age where we don't have to visit our client to do the audit. I can sit here at home, and this is your accounting software, and I can sit here at home, and I can literally, you can allow me into your system, and I can do two things. I could just extract all the information I need onto, and I'll keep it as simple as an Excel document. Or I could do it within your software if it has the right sort of tools. And I can do my AEIOU within this sort of field. I can analyze, I can put everything in Excel, I can add everything, recalculate, do my ratios, all within Excel. That's one thing that I could, if you like, do. That's the first thing. Then the next thing I could do is to now test the integrity of your system, if you like. So almost like looking at test of controls. So there's two things I'm only ever doing, and you're only ever going to be tested on. One, it's actually looking at the data and manipulating the data and doing what I would have done. I can take my sheets, I can do my cutoff, I can do absolutely everything, all my procedures, if you like, in an Excel sheet from home, because you are literally have put all your documents online. But like the second thing, like I said, I could do is I could test your system by putting in test data or dummy data to see whether your system works or can resist or is can prevent me from changing and manipulating the internal hardcore data on it. So let's look at these examples and walk through and see where they fall into. It says analyze the non-current asset register to identify. So what does that mean? I've literally taken the information, I've put it in my Excel document, and I can analyze it. I can compare, I can do a proof in total. This is one amazing test you should always write when you do any sort of analysis. Always write proof in total. Basically, it's a forecast. I take what I think it should be, what it was last year, adjust for inflation, see what it is now, and compare it to this year. Always please write that down. That's what we're doing here. I'm just playing with the data in Excel. Cast the non-current asset register to verify. So what have I done here? I've just taken all that information and just drawn a line down to get the totals. Recalculate. AEIOU. Analyze here. Again, recalculate. Add. Again, basically add figures that are here already. So that's what I've done. Here, this is the last one here. I'm now throwing in dummy data or test data. So I'm attempting to make changes to the register to ensure access to the register is restricted to authorized personnel only. So this is what they mean by describing a procedure using test data. So I throw in data in there and to see whether your system can resist this. So again, whenever you see this computer assisted audit techniques, there's only two things you can do. You can extract data and play with the numbers, or you can actually throw dirty data at it, or you can try and put in a different order. You can a random order number to see whether the system will accept it, or you can whatever. You can decide to change the standing price to see if it'll give you a different invoice or whatever, that sort of thing. But here you're really looking at controls, right? So the answer here is D. This is where we're dealing with test data. And I think you all, I saw some very good answers. I think all of you might have nailed that. This is good. Okay, great stuff. So finally, number 29, select whether the following factors should be considered when evaluating, yes, the internal audit function, or when evaluating the internal audit work. So whether the conclusions reached are appropriate and the competence of the staff. Now, I don't know. I think it was Dudley. Dudley, what did you write here for me?
The first one was internal audit function, internal audit work. The second, I got those wrong. I'm not sure which one.
Yes. So let's. Yeah. So this means I think here what they really mean, but I think they could have been slightly clearer, is the actual work that was done by the internal audit people who did, if you like, who did some work for you, basically, the actual work. This means that whether or not you will use them. So they have the actual department. What are the things you will consider as to whether or not you would actually use them to do any work for you? So they do the work, and you have to still review the work itself. So whether the conclusions reached are appropriate. So that's why we talk about that would be internal audit work, and the competence of the staff and the qualifications. So you're thinking, are they qualified to be audit juniors stroke seniors for me or to work for me? Which is why your two answers are like this. Yeah, I think I remember, but I suspect I'm not sure if you just rushed and you weren't happy with it, but hopefully that you can sort of see what's going on here. But really, because we can have internal audit people work for us, but we want to test. So this, in truth, this would have been part of our audit strategy. Of course, definitely, because they tell us anyway that they would like their internal audit tools to work with us. So as part of internal audit strategy, we would assign them. Perfect. It literally walked into me. Hannah, your thoughts? This will help me end this area. Where did you go for here?
I done the first one as audit work, and then the second one as audit function.
Perfect. And your number 30?
Am I done 30? Oh, sorry.
No, you're okay.
My
no, it's
computer.
Okay.
For number 30, I went A.
Yes, I thank you, and I think a lot of you did go with A. I thought this was quite cheeky for, it just seems slightly, for lack of a better word, almost not disrespectful to internal auditors. I mean, hey, you guys, you can go look away at sundry expenditure. We'll look at the real stuff, property revaluations and revenue and financial investments. Slightly cheeky, but I think the point is being made that you are responsible. So, if you would like them to help you, well, yeah, they can look at some of the expenses on the income statement. They can do probably the expenses section, analyze and do some cutoff work and accrual testing, if you like, for you for there. But of course, you would be responsible for the big ones, revenue and definitely financial investment. And to be fair, property evaluations, that's true. So A was the answer here. Cool stuff. Well done, guys. You've done well. We've done good. Yeah. So let's take a break. Let's go to I think you deserve a good. I'll be generous. I'll give you 17 minutes. So we'll come back at 11:30. And then we'll discuss. We'll jump into the next question we probably, whether we finish it or not is not the point, but our revision begins, right? Cool. So see you at 11:30. And Hannah, see you later if you're leaving us now. But
Yes, I'm going to have to leave now.
no problem. See you later. Have a good week.
Oh.
Okay. Bye-bye.
Thank you so much, Owen.
No worries. See you later. Bye-bye.
Bye, bye, bye.
Bye, Hannah.
Bye.
Later.
Right. Hi there. Great. Oh, yes, of course. Yes, you are. Let me just, all right. I think I'm just going to table of contents. Sure you can see my screen. I don't want the study text. I want the exam kit. Sorry. Log in here again. Right. Right. So what I wanted to pick up on was to really highlight again. I recognize that, of course, you are very busy, and what I wanted to recommend was to you know, get into a pattern, if you like, of doing at least 2-3 of these a week, of these questions across the spread. So if you look in your textbook, what I'm doing is that what I'm asking you to do is I'm asking you to do one question from planning and risk. If you look at the section B type questions, I'm asking you to do one question from planning and risk, one question from internal controls and audit evidence, one question from audit framework, and one question from review and reporting. So that review and reporting from question 194 to the end, I'm going to have to make sure. James, is your book never, did you? Oh, wait, sorry. Am I even, I'm let me just confirm with you, for you guys. Wait, so this, because it's, they changed their, for you guys, your last, what are the last 5 questions in your kit, in your exam kit?
Clarinet.
Okay. Paprika.
Panda.
Panda. Right, exactly. Great stuff. So, yeah, that's good. I think, James, hopefully the PDF I sent you should have those for Clarinet, Paprika, Panda, Mini. Hopefully you'll be able to find them, because they're actually from the old later years, like June 14, December 13, so they should be on there. We can try and identify them. So hopefully over the next 2 weeks, yes, latest within the next week, even or 2, you would have covered all the review and reporting questions in the text. So that's the aim. So you've covered those. So and then we just keep on doing as many of the individual questions that we have here to do. And I think then we just get better, and I'm already quite happy with where you guys are. So that's kind of, so next, for the next set of questions I'm going to set will be 152 will be BlackBerry, which will be the next one from planning and assessment. Raspberry, which is from internal controls and audit evidence, and Orange Financials, which is 189 from audit framework, and Paprika. But I'll write that and send that out to you, and actually we'll confirm it before we go, so you can do them over the weekend, as opposed to last time when I only sent them to you. I don't remember when, maybe on a Monday or something, not giving you enough time. Okay, great. So Darjeeling, which was 151, we have looked at before. But what I want you to do, I mean, I know we only have an hour, but what I want you to do first, because I hope to look at Darjeeling and also look at and chamomile, which I asked you to do, we literally did last week. So what I really would think is a great idea, I mean, for complete revision, for the completeness of revision, I think, which is all I can but again, don't worry. I will put as much pressure on you, but you just work with your pace and work and just balance it. Don't worry if I'm asking you to do so many questions. You'll probably end up doing, if you do about 40% of what I'm asking, that's great. So don't worry. So what I would like to do is to write up your notes, definitely for Darjeeling, Chamomile, and then we'll discuss Cinnamon, which is 188, and definitely I would like you to send me Clarinet 194. We won't have time to do that, but definitely that will be the first thing I go through next week. So really to just keep pushing you to do as much as possible. Darjeeling, when you did Darjeeling, I think we kind of did it once or twice now. But there is a point about Darjeeling that I'm really interested in, which is why when I say I wanted to do a bit of it again, an area, is to do with the substantive procedures in relation to revenue. I want you to become so conversant and comfortable with substantive procedures. They are coming, and they are actually straightforward once you just get into the rhythm of writing about them. There is nothing special about them. There's almost, if you like, consider it a formula. And once you're writing about it over and over again, what I'm just cautious is technically I'd be like this 3 weeks to the exam, but I have 6 weeks. So I can't, well, 5, 6 weeks. I don't want you peaking too early, but I want you to writing them regularly. So this was a company that had, we're not interested in any of the early bits here. This is a company that had some problems, and I think the issue here was that let's look at the key point here. So like all exam questions, yes, they would like you to focus in and hone in on the actual question. So relate your test to the question, but as well, I would like you to do some general substantive writing on revenue testing. So what we have here is that two things. They spent 0.9 million on intangible assets. The company started a number of initiatives during the year to boost revenue. It offered extended credit terms, that their sales orders would be increased. They made an announcement of a price promise to match the price. You might remember all of this, the refund liability, and they had some faulty, yes, here we are. They informed the director that the problem arose related to the mixing of materials within the production process for one particular product. A number of these faulty paint products had already been sold, and the issue identified following a number of about the painting consistency. As a result, further sales had been stopped and a product recall had been initiated. So, so what I would like you to do really is just for a few minutes, write out. So it says here, I'm interested just in E, part E. So describe, kind of from what I've said, describe or write out, if you were to write out, and let's see how much you remember. If you were in general, first of all, just trying to carry out some, remember our AEIOU as a guide, substantive procedures relating to revenue in general. And of course, reflect on the question itself and see what else you could add, right? And then let's compare that. And we'll do this regularly so you just come to see the process of writing out these substantive procedures. I think it's critical. Okay, great stuff. So yeah, I think we'll say we'll do this for about 10 minutes, 10, 12 minutes. And then I'll ask your thoughts of what you have and then compare them to the mark scheme to get our answers literally word on word with theirs. Don't forget, consider all the components of sales, if that's any clue, if you like. I'm trying to, they are asserting certain things. Think of the assertions. They have made certain assertions about what revenue is. I won't tell you the assertions anymore to help you, but they are making, so we're testing those assertions really in effect. Cool, great stuff, have a go. So yeah, we'll talk again at 12, say 12 past 11, sorry, 52 past, so 8 minutes to 12, we'll stop writing and look at our answers. Cool, so let's do that first. I hope you can see my screen. It's the E part of question 151, Darjeeling. Okay, so let's look at this together. And like I say, I gave you sort of 12 minutes, say, given a 1.8 minute sort of per mark, 2 minute per mark type of thing. And what I want to start doing now is literally, because initially we've kind of talked about it, is to go to the mark scheme, and I literally want you to map your answers to the mark scheme to see how close you are to the detail of the mark scheme. Maybe still peaking, to be fair, because you won't be there yet, but hopefully you'll come back. Which is why I want you to type this up. So critical to type this up later on. Keep a good record of it. Come back, and when you do practice it, you still hit on the big points with revenue. I think what I like to say to students is that audit isn't really different, that different to, or I guess fundamentally being a good auditor is having a good understanding of the actual financial statements. And if you and I remember good old school accounting, when we had trading accounts, I probably should go to Dudley, because you're probably, I'd say Dudley, you're probably the no, James, you didn't do AAT. Dudley, when you did AAT, did they talk about, was it called statement of profit or loss, or was it called trading income and profit, trading profit and loss account? Did you do that type of thing? Have you ever heard of that before, trading profit and loss account?
Statement of profit and loss.
This is called profit and loss. There was a time we used to call it the trading profit and loss account.
Oh yeah, we still use all the old balance.
Of course. UK get
confused all the time.
Yeah. So the trading account still clearly says you have sales less sales, if you like, sales returns. A very clear, to get net sales, there's a very clear indication of the need to consider that sales returns must be considered when we talk about revenue. So there are almost 2 marks in each one when you think about that. So every time you talk about revenue itself or sales invoices, you're talking about credit notes as well. Every time you talk about cutoff for sales invoices, you're talking about cutoff for credit notes as well. So you're getting double marks every time you talk about that. Every time you talk about completion, or walkthroughs or whatever it is, those 2 things have to be considered. Every time you talk about accuracy, because remember we're looking at these these assertions, if you like. Every time we talk about accuracy on sales invoices, we're talking about accuracy on credit notes. Why not? Credit notes need to be accurate, need to be complete, if you like, need to be in the right period, cutoff. So, and why not? You could technically carry out a proof in total as well on credit notes. You expect these amount of returns based on last year. You do a percentage. You take a percentage. You do exactly the same thing for this year and compare to see what's going on. In fact, I think that's a very good test when I come to think about it. And then we do not fail as good accountants after every set of accounts that you've prepared to do some sort of financial report, some kind of financial ratio analysis. And I've said it before, definitely at level 4, when I got the opportunity to teach level 4 2 years ago, because it was really my first teaching of it, was that when you are talking about financial ratios, I mean, I'll take you to their answer, although I know we just do it because, but I've always highlighted that, not because it's entirely wrong, but because the overall gross profit ratio is technically useless to everyone unless that company sold one product. It means nothing for us really in terms of analysis and gaining any knowledge as management accountants. From a reporting point of view, yes. But from an auditor point of view, stroke management accounting point of view, we want to understand what's behind those numbers. So we literally, and we have, like I said, the CAAT, computer aided assisted technology, or to break up revenue into the different components. We could group them big, really material, not material. You see where I'm going? Material customers, immaterial customers, these bring in 90% of our trade, these bring in 10% of our trade. You could do it and look at the GP margins for each and then do a proof in total. So let me take you straight to the answer, just so you're thinking of it like that, so that for you, whenever you see a question on revenue, substantive testing, because it will see you're just comfortable, just bang out your writing and you walk away. Okay, let's go there quickly. Yeah, I should just write it here. Let's go to 30. Let me guess 30. Would 30 take us there? No. Okay, let me go to. Oh no, it's a different one. It'd be if those are questions. Sorry, practice answers. Answer to practice questions. Here we are. So let's begin. So it's about mapping your answers to. Again, I think just to get marks, yes, why not? If you like, how in your own language, whatever, however you. Oh, I hope you can see my screen. However you want to talk about it. We want to compare. Again, if you didn't write this, please add this to your answer. I mean, I'll be honest with you, I typically forget. I always only ever compare in my writing in a rush. I always only ever compare revenue against prior years. I never remember to compare it against budget. I tend to bring in the budget when I'm talking about going concern, things like that. But in terms of analysis, yes, it's just as important. So to really like peak and let's get all the marks, let's just be selfish and get all the marks. You want to highlight that you intend on looking against the revenue and industry and against industry. You know, why not? Just to get just for you to be comfortable, compare that. I've said to you that for every income statement entry, whatever every expense you can perform was referred to as a proof in total. Please, that needs to go into your writing. This is evidence that you have been to an audit class or you have read audit. Proof in total. What do? You're basically creating an expectation. So you take, but you can see the sense here is to take, because there's whatever the reason. There's a reason why, because when you break it down. Sorry. Close this door, please. Close the door. Close the door. Close it. Sorry. Okay. It's not. Please take it. Sarah, go. Please, Sarah. I'm on daddy duty after this from 12. Homeschooling. Whatever. Okay, right. So a proof in total, again, like I said here, is critical. We want to be highlighting this opportunity to, and I actually think you can discuss proof in total from your own understanding point of view. You could have broken down the components of revenue. And what is the proof in total saying? Proof in total is saying that this is what the price is. You sold this. This is what the average price is. You have sold 2% more than you did last year. You have to take all inflation into account, or there's a price inflation as well. And let's see what the new expectation should be. You can do a proof in total for wages. That's another popular one. So if you're doing a wages, it's an expense. So we can do a proof in total. So those are the big words you want to be bringing in. Definitely analyze 1 year to the next. Create a proof in total. This language must go into your writing going forward. You'll see these questions repeat themselves, of course. So I've always talked about initially, I've always said, I think it's best to open with this idea of trying to get a breakdown. It doesn't matter what you're dealing with. If you're talking about inventory, you're trying to get a breakdown of the list of all the inventory so you can add it all up and compare and then do whatever it is you need to do. But again, the same thing is you can see there's big words there, obtain the broken down. If you haven't highlighted the fact that you want to get a breakdown of revenue, you want to be thinking, how do I get a breakdown? and how do I compare revenue between, if you like, not just revenue, but gross profit margins from one year to the next. Remember, these people actually have a problem. They have a product that stopped selling, that became faulty. So you almost want to highlight the fact, I think they talk about it later on, maybe they don't, but you actually want to understand what the revenue for that product was last year, what it is this year, and what the fall in revenue has been from one year to the next. If you like, and if you'll be, well, we'll come back to that later on. Any unusual managements and any unusual movements. Again, it's important, I think, to calculate GP margin and to compare it with prior year, because now sometimes you might be wondering, and I don't know if, I doubt you might be wondering it too much, why it's so important to perform gross profit margin. But gross profit margin is critical because gross profit margin shows the increase in, if you like, brings together revenue and cost of sales. And generally, the assumption is, and this is quite standard, that if you have an increase in revenue, that generally you would have an increase in cost of sales. Well, the only two things that can cause this increase are typically price or quantity, PQ. So if you have, so GP typically stays the same. You can have revenue increase, but if just because you sold more, but it costs you more because it costs quantity, PQ for costs increased as well. So GP typically stays the same. So the fact that we see an increase in revenue becomes irrelevant because GP stayed the same. I think those are the ways you think about it. But if GP increases from one year to the next, well, a number of things happened. Either Q fell and P stayed the same price, or P went up, prices went up. So it tells you, GP increasing gives you signals, something's changing here. But then we see that either we can see a break, so basically ultimately what you want to see is, what you want to calculate is, what will only make sense is GP for the individual components of revenue. That's it. This overall GP is pointless. If I can see the individual, which we can, I'll say, can I see a breakdown of all your products? And I will just use Excel and find out, and I can see the increase, and I say, okay, great. The price increases here, there was greater demand here, costs fell there. And you can look and investigate any significant, if you like, anything else you wanted to investigate, any significant fluctuations. So when they talk about significant fluctuations, that pushes you to suspect if things are falling. It helps you think about if revenue is falling for a particular product. It starts getting you thinking, why is the revenue falling? Then he says to you, or she says to you, oh, there's been a fall in demand for this particular product. You're like, okay, that pushes you to ask the next question. Do you have a lot of it in inventory? Are you selling it for more or less than the initial cost? Pushes you into start to think about the valuation of inventory, which is why there's such a strong relationship between GP margin and everything else going on. Right, so it's not just for the sake of calculating it, but because it starts, and you can write that. You're showing the examiner you understand the relationship between GP margin and the rest of everything else, if you like. Again, like I say, it could be because costs are going up, and if costs are going up of raw materials and your sales are still the same, it can tell us other things, even going concern issues, maybe, right? So rich in terms of revenue, and you can practicalize it and make it yours, so to speak, in your own language, because you understand. You're like, okay, I know exactly why I'm calculating this thing, as opposed to just writing it. Okay, here we are. Accuracy. You fundamentally want to, if you get a sample throughout the whole year of sales invoices, comparing it to either the sales order or the master list, if you like, on the and you looking at the discounts. It doesn't really matter what you're looking at. You'll have a little box where you're ticking off discounts calculated, prices agreed with the customer, that sort of thing. But you want to test accuracy. That is another, if you like, assertion. And then there's, of course, here we are. So recalculation, still to do with accuracy, recalculate. So really nice, simple marks that please write this in and highlight, take a sample for accuracy, recalculate the discounts, the sales taxes, or whatever. I mentioned credit notes just during the year, just to see, did they actually deduct credit notes from the invoices? Did that actually happen? It's just as important a mark and a component, if you like. These are, this is just natural with this area of revenue. So that you can see, and I'm doing this carefully, so you can see there's revenue, and then there's the asset of trade receivables that we'll come back to, where we look at bad debts, where we look at circularization and sending out information out to the client to tell us whether or not they owe us, because that's an asset. We're looking there at existence, rights and obligations, things like that. Yeah, and here we are. Then the next one here, this is, did it actually happen? So you literally want to go from the order, if you like, to the dispatch note, if you like, to it being going on to the ledger, if you like, the general ledgers, and you want to then see it being the money. I think they haven't completed this to see the money being paid in the bank. You literally want to see everything happen. So what you typically do is you take, I don't know, it doesn't really matter, maybe 3 or 4 invoices of different sizes. It doesn't really matter. It's not about the amount. It's the fact that it occur. So you take maybe 2 or 3 each month throughout the whole year, right to the end of the year, and then post year end for the invoices that you're dealing with in the last month of the period. For example, say December year end, you'd look at those and you're looking post year end for the money coming in, right? But you literally have just taken a sample of order, just a walkthrough test, order to dispatch to invoice to money in the bank, if you like, and you sign off, yep, this did happen. Right, and then, of course, cutoff, golden mark, gold, cutoff. You must write cutoff. Cutoff is not about invoices. You will lose the mark if you mention the word invoices. It's about the dispatch notes. The dispatch notes really are the core of what's going on here. The dispatch note signals transfer of product, if you like. So dispatch notes prior to the year end, sale happened. Dispatch notes after the year end, sale happened after the year. That's where the cutoff is really happening, right? So the dispatch notes should drive the invoice, right? That's the key thing. So don't forget that, you can see. So I would go as far as saying, select well, they're saying sample, based on materiality, typically you might say 10 and 10 prior to the year end, but show the examiner that you understand it clearly what you're trying to why you're going with the dispatch note, because the dispatch note means the goods have been exchanged and therefore sale has been made, if you like. Right. Then, of course, these were particular problems to the company. So it says, for sales made under the price promise, compare the level of claims. So, I mean, however I think you can almost be personal now with this. You can focus on those products that they had issues with. And here we had also the sales under the price promise. So you probably get extra marks, of course, as well, but for focusing clearly on what's going on with these here. We want to see, well, if you're given a price promise, definitely there must be some kind of refunding going on. And based on a sample in a month, if you like, we can then extrapolate for reasonableness. I'm trying to make it as practical as possible, right? So you say, okay, what volume happened? What percentage of sales came back? And how much have you refunded? And as a percentage of sales, what was the refund? So you now get some kind of, you maybe do for 2 months, you take an average. You're like, okay, you are refunding back 5% of your revenue. So we will say a warranty provision of 5% every month, and therefore a total of X. So, and then compare it to what, so you can see I've kind of done a proof in total and then compare it to what actually happens. So a lot of this is judgment. You're on your feet thinking about it. You and I might differ a little, but I've gone with the first 2-3 months. I think the examiner just wants to see that, okay, you can see here, compare the level of claims made to date. Right, so they've gone with the whole thing. Yeah, I think that's the key point with what they've currently recognized as a provision. And then finally, yes, the other thing I wanted to highlight here with cutoff is that, like I said, cutoff for if you have sales returns post year end, after the year end, really important. Sales returns after the year end to do with sales in your year, we should remove those because they relate to our year. They are adjusting events, yes, because they relate to our year. So for sample of sales invoices issued between June and the product traced to confirm these sales have been removed. So all those product recall issues, we need to deduct those. They shouldn't keep on. Clearly, they need to go. they need to go as well. Okay, great stuff. Yeah, I think I might not. I think what we'll do is, what I'll say is that, so what I'll do is I'll just go to the question. I'll just go to the question and then get you thinking about it, and then I'll ask you to send it in as well. And that question is question. It's probably a good idea that we don't, so that you get a chance to. Cinnamon, question 188. So please, please, question 188. Let me just go to question page number 30. Question 188. Question 188. Cinnamon. Now, I think this is a good question for you to kind of pre-read. Yes, here we are. I have 188 showing here. What I would like you to do is to read up on the chapter 4, please. It's good revision. Read it up, and then come back and attack question 188, and also then do question 194 clarinet, I believe it is, or clarinet. So do that as well. Maybe over this weekend, try, take some time. They don't take too long. This is just a 20 marker. This is a knowledge question. Really shouldn't take too long, just getting into the habit, and then do the other one. And then the questions I would then like you to do for the week would be BlackBerry, which is 152. Write it up. We probably might have done it. So if we've done it, I won't go through it, but I might just look at it. 152. I have 152 here. Raspberry. So let me go back to the questions. BlackBerry, Raspberry. Yeah, here we are. BlackBerry, Raspberry. Orange Financials, which is 189, and Paprika, which I have as 195. So BlackBerry 152, that's what I have here? Yes, 152. Raspberry 165. Orange Financials, which is 189, and Paprika, which is 195. So please, yes, work on those. You have, I guess, 7 days, and that means we come back to class. But during the week, I'll be communicating a bit more now that we're finished, to kind of talk about what I will do in class. I probably will do, I hope to mark some of your work and then do the work backwards, kind of go back to the questions on procedures and reporting. So I need to do a question on reporting. So I might do the get rid of the reporting ones quickly to come back again to them, so that you're very, very good at those, and then just keep coming back and revising procedures and risks and ethics and things like that. Yeah, awesome, great stuff. Is that good?
Yeah, sounds good.
Awesome, guys. Thank you.
Brilliant.
No worries. Have a good weekend. Look. Hopefully, apparently, it's going to be it's going to be good weather. So, that should be good reason to go out and get some ice cream.
Sounds good to me.
See you later.
Thanks, Owen.
Cheers, Owen. Thanks.
Thanks,
Bye.
Owen.
No worries. See you later. Bye bye.